Hello and welcome to our channel, where we talk about everything finance. In today's video, we're going to talk about one of the most important aspects of your financial life, your credit score. Your credit score is a 3-digit number that rates your credit worthiness, or how likely you are to repay your debts on time. It ranges from 300 to 850, with higher scores indicating better credit behavior. Your credit score can affect your ability to get approved for loans, credit cards, mortgages, and other credit products, as well as the interest rates and terms you receive. It can also impact other areas of your life, such as renting an apartment, getting a job, or paying for utilities. So how do you know what your credit score is, and how can you improve it and keep it healthy? In this video, I'm going to answer these questions and share with you 8 ways to boost your credit score and achieve financial success. But before we get started, don't forget to like and subscribe to our YouTube channel for more amazing content. Let's get started. Number 1. Check your credit reports regularly. Your credit score is based on the information in your credit reports, which are records of your credit history maintained by 3 major credit bureaus: Equifax, Experian, and TransUnion. These reports contain information such as the number and type of accounts you have, your payment history, your debt balances, and any negative items such as collections, foreclosures, or bankruptcies. You should check your credit reports at least once a year to make sure they're accurate and complete. You can get a free copy of your credit report from each bureau every 12 months through annualcreditreport.com, the only authorized source for free credit reports. You can also access your credit scores for free from various sources, such as Credit Karma, Credit Sesame, and Discover. If you find any errors or discrepancies in your credit reports, you should dispute them as soon as possible with the bureau that issued the report. Errors can lower your credit score and hurt your chances of getting approved for credit. Number 2. Pay your bills on time. Your payment history is the most important factor in your credit score, accounting for about 35% of it. Paying your bills on time shows lenders that you are responsible and trustworthy with your finances. On the other hand, missing or making late payments can damage your credit score and stay on your credit report for up to 7 years. To avoid missing or making late payments, you should set up automatic payments or reminders for your bills. You should also pay at least the minimum amount due on each account every month, but ideally more than that to reduce your debt faster. If you're having trouble making payments due to financial hardship, you should contact your creditors and ask for assistance or a payment plan. They may be willing to work with you and waive fees or lower interest rates. Number 3. Keep your credit utilization low. Your credit utilization is the percentage of your available credit that you are using. It's calculated by dividing your total debt balances by your total credit limits across all accounts. For example, if you have a credit card with a $1,000 limit and a $500 balance, your utilization rate is 50%. Your credit utilization is another important factor in your credit score, accounting for about 30% of it. Keeping your credit utilization low shows lenders that you are not overextending yourself with debt and that you can manage your credit well. A general rule of thumb is to keep your utilization rate below 30%, but lower is better. You can lower your utilization rate by paying off some of your debt balances, increasing your credit limits but not using them, or spreading out your charges across multiple accounts. Number 4. Build a long and diverse credit history. The length and diversity of your credit history also affects your credit score, accounting for about 15% and 10% of it respectively. The longer you have had accounts open and active, the more information lenders have about your credit behavior and the more confident they are in lending to you. The more types of accounts you have, such as revolving accounts like credit cards and installment accounts like loans, the more experience you have with different kinds of credit and the more capable you are of handling them. To build a long and diverse credit history, you should keep your oldest accounts open and in good standing, as long as they don't have high fees or interest rates. You should also use your accounts regularly, but not excessively, to show activity and avoid dormancy. You should also consider adding different types of credit to your mix, such as a personal loan, a car loan, or a student loan, as long as you can afford them and pay them on time. Number 5. Limit your credit inquiries. Every time you apply for a new credit account, the lender will perform a hard inquiry on your credit report to check your credit worthiness. A hard inquiry can lower your credit score by a few points and stay on your credit report for up to 2 years. Too many hard inquiries in a short period can signal to lenders that you are desperate for credit or a risky borrower. To limit your credit inquiries, you should only apply for credit when you need it and when you are confident that you will get approved. You should also avoid applying for multiple accounts within a short period unless they are for the same type of loan, such as mortgage or a car loan, and within a 14 to 45 day window. This is because most credit scoring models will treat multiple inquiries for the same type of loan as one inquiry, as long as they're done within a certain time frame. This allows you to shop around for the best rates and terms without hurting your credit score too much. Number 6, become an authorized user. Becoming an authorized user on someone else's credit card account can help you boost your credit score, especially if you have a thin or no credit history. As an authorized user, you can use the account owner's card and benefit from their positive payment history and low utilization rate. However, you are not legally responsible for paying the balance or any fees associated with the account. To become an authorized user, you need to find someone who trusts you and who has a good credit history along with a low utilization rate on their account. This can be a parent, a spouse, a sibling, or a close friend. You also need to make sure that the account owner's card issuer reports authorized user activity to the credit bureaus. Otherwise, it won't affect your credit score at all. Becoming an authorized user can help you establish or improve your credit score, but it also comes with some risks. If the account owner misses payments or maxes out their card, it can hurt your credit score as well. You also need to be careful not to abuse their trust or their credit limit, as that can damage your relationship with them. You should always communicate with the account owner about how and when you will use their card and how you will repay them if necessary. Number 7, get a secured credit card. A secured credit card is a type of credit card that requires a security deposit as collateral. The deposit usually matches the credit limit on the card, which is typically low, such as $200 or $300. A secured credit card works like any other credit card. You can use it to make purchases and pay them off later, and you will incur interest and fees if you don't pay in full by the due date. A secured credit card can help you improve your credit score by giving you access to credit and allowing you to build a positive payment history and a low utilization rate. However, unlike an unsecured credit card, a secured credit card does not require a good credit score or history to get approved. It's designed for people who have bad or no credit and who want to rebuild or establish their credit. To get a secured credit card, you need to find a reputable issuer that reports to the 3 major credit bureaus and that has reasonable fees and interest rates. You also need to have enough money to pay the security deposit and the monthly bill. You should use your secured card responsibly and pay it off in full every month. Over time, you may be able to upgrade to an unsecured card or get your deposit back. Number 8, be patient and consistent. Improving your credit score is not a quick or easy process. It takes time and effort to build a positive credit history and to repair any damage done by past mistakes. Depending on your situation, it may take months or even years to see significant changes in your credit score. However, if you follow the tips I shared in this video and be patient and consistent with your actions, you will eventually see results. You'll be able to qualify for better credit products and terms, save money on interest and fees, and achieve your financial goals. I hope you found this video helpful and informative. If you did, please give it a thumbs up and subscribe to my channel for more videos like this. Also, feel free to leave a comment below and share your tips or experiences with improving your credit score. Thank you for watching, and I'll see you in the next video.